All right, let's talk about getting started with long-term investing. Today, we're going to map out a super simple, clear path for anyone who's ready to begin that journey. Let's dive in. So you've decided you want to invest for your future. That's awesome. It's a huge first step. But then you're hit with this absolute wall of information: stocks, bonds, crypto, options. It can feel totally overwhelming. I mean, where do you even start? You are definitely not alone in feeling this way. I love this quote from Reddit user Garly1 because it's so true. It can really feel like you're lost in a dangerous jungle. But I promise you, there is a well-worn, straightforward path right through the middle of it. And that's exactly what we're going to map out today. Okay, first things first. Every journey needs a compass, right? For investing, that compass is your strategy. We're going to start with one that's simple, it's steady, and it's incredibly powerful over the long haul. This strategy is called dollar cost averaging, or DCA for short, and the idea is just brilliant in its simplicity. You invest a set amount of money, let's say $100, every single month, no matter what. So if a share costs $100, you buy one. But here's the magic. If the price drops to $50, that same $100 now buys you 2 shares. This whole approach takes the emotion and the guesswork out of the equation and just builds a powerful, disciplined habit. And this really gets to the heart of why DCA works so well. It's all about this big idea: time in the market versus trying to time the market. Look, attempting to perfectly predict all the highs and lows, that's a major reason why so many investors actually end up underperforming. The proven path to long-term growth is just staying invested through all the market's natural ups and downs. And hey, if you still think you can outsmart the market, get this. According to NASDAQ, a whopping 65% of actively managed U.S. large-cap funds, we're talking funds won by highly paid professionals, failed to beat the simple S&P 500 index in 2024. If the pros can't consistently do it, what makes us think we can? All right, we've got our compass, dollar cost averaging. Now we need our tools. And this means picking the right investment vehicle to carry us and the right gateway to get us on the road. For our vehicle, we're going to look at an exchange-traded fund. You'll hear it called an ETF. The absolute best way to think of an ETF is as a basket that holds hundreds, sometimes even thousands of different stocks. So when you buy just one share of that ETF, you're actually buying a tiny little piece of all the companies inside that basket. You know, for a beginner who's using DCA, ETFs are just about perfect. They give you instant diversification, so you're not putting all your eggs in one basket. They have incredibly low annual fees, and they're super simple to buy and sell. A great place to start is with a broad market ETF that tracks an index like the S&P 500. You'll see popular ones like VOO or VTI. So, you know what you want to buy, an ETF. But where do you buy it? You can't just go to a store, right? You need a specific kind of account that acts as your gateway to the stock market. And that's called a brokerage account. The really good news is that getting started has never been easier or cheaper. This table shows a few popular online brokers, but the crucial thing to look at here are those last 2 columns: $0 stock and ETF trading fees and $0 account minimums. What that means is you can open an account for free and start investing with just enough money to buy a single share. The barrier to entry is gone. So we've got our strategy, we have our vehicle, and we've picked our gateway. The very last practical step is just walking through that gate and actually opening the account. When you sign up, the broker is going to ask for some personal information. Don't let this throw you. This isn't unique to them. It's a standard, legally required identity check that all U.S. financial institutions have to do to protect your account from fraud. It's known as the Know Your Customer, or KYC process. You'll just be asked for your full name, your date of birth, your address, and an identification number, like your social security number. Honestly, just think of it as a simple one-time checkpoint on our map that'll take you maybe a few minutes to complete. It's no big deal. Okay, our map is complete. You have the route, you have the tools, and you've got the destination in mind. But just like any journey, it really helps to know about the common wrong turns. So let's cover the rules of the road to keep you on the right path. The biggest mistake is treating investing like it's a game. As one Reddit user wisely put it, a lot of beginners don't invest in the market, they play in the market. Constantly jumping between different ETFs, it just ruins the magic of compounding. That's where your money starts making its own money, and it can create a really nasty tax bill. The second big mistake is letting fear take the wheel. The market will go down sometimes. That's just a natural part of the cycle. But remember our DCA strategy? A downturn is when your $100 buys you more shares at a lower price. Selling in a panic is the fastest way to lock in your losses. And mistake number 3, chasing hype. A Reddit investor shared their story of losing money because they invested in the once hyped ARK funds just because the manager was some kind of superstar. Don't invest based on personalities or flashy headlines. Just stick to your simple, steady plan. So, the crucial point that ties all of this advice together is this. The most important trait of a successful long-term investor isn't being a genius. It's just discipline. Have a plan and stick to it, month after month, year after year. Which brings us right back to our guiding star. If you only take one piece of wisdom away from all of this, let it be this one. Time in the market beats trying to time the market every single time. We've laid out the strategy, the tools, and the rules of the road. That jungle that seemed so intimidating, well, now it has a clear path forward. So the only question left is, where will your journey begin?